And we are live.
Yes, welcome to another Tuesday night of Homebuyer Academy Live. We are excited to be here on another Tuesday with you guys. I'm your host, Maurice, and you know my co host already.
Chad Murray, what's going on, good people? How you guys doing today?
But let me
All
get the
right.
chat queued up as well.
Yeah, let's go.
And as
Let's
always, we're
go.
going to start with our mindset minute. We're going to reel it in. We're going to get locked in for today's subject matter. And then we're just going to go off to the races. So let's take a moment and just get centered, get focused, ask God to come into the space and say, take away everything that the day had before me. And let's just focus in on this moment right now. Invite peace, invite stillness. Uh, and actually, all day I've been hearing peace be still. I mean, God been having a conversation. So for you all today, in this moment, just relax. Take a breath if you need to, and just get locked into this moment because we're going to have a good, fruitful conversation tonight. We're talking about various things that's going to help you guys succeed in the housing process. So, again, let's take another couple seconds here of just reeling it in, focusing in, and getting into this moment, being still and being present right now. Amen. All right. So, Chad, where are we going on tonight's just conversation?
Man, tonight, Mo. First and foremost, thank you so much for being here. We missed you the last few weeks, man. I know that you were working on that Daddy of the Year trophy.
Of course, man. You know, I had
Doing
like a lot of
amazing
end
things
of the
with the
school year
kids.
stuff. Mm-hmm.
Yeah, no
Yes,
doubt,
sir.
man, no doubt. So tonight, what we're going to talk about are different loan programs. We're going to really hone in on the things that you want to focus on to find the right mortgage because we're in a time where there's going to be so many opportunities, and we talk about it over and over and over again because, like, it's very crucial to be able to grasp the fact that this isn't the market of 2 years ago. This isn't the market of even a year ago, where there were so many properties that were being pushed up price wise because there was so much competition. A lot of the competition has left the market. So if you structure your process the right way, man, I'm telling you right now, there's going to be some great opportunities coming your way. So we're going to be talking about some of those loan programs that are going to help you to get to where you want to be. So buckle in. If you can, just go ahead and let us know where you're watching from. Also, like, comment, subscribe. And if you have any friends or family members who are in the home buying process or need help getting into the home buyer process, please send them this way. Send them the link to Home Buyer Academy because we have a very dynamic program. And of course, we're doing the work here live week to week. But in all reality, this is work that we're doing in churches. We're doing it in different community environments so that this work actually is getting to our community in a way that's going to change the game for them. So we don't want you to miss out. So feel free to go ahead and connect your people to this work. So, Maurice, what I wanted to do first, though, right, is before
Mm-hmm.
we actually got into the loan programs, the loan products that we have, I want to actually give a few shout outs to some of my clients who've been able to have phenomenal success over the last few weeks. Um,
Awesome.
yeah, so we actually had a closing the other day, and this is something that came up in our home buying workshop. I have a client that reached out to me in 2020, and her goal at the time was to fix her credit so she could eventually buy a house. And man, when I tell you, we started the process, and life was just lifing. Her credit score would go up, and then life would happen and bring it back down. Things were going well, and then things would just take a turn. But the thing about it is that my client, she really stuck with the process. She stuck with it, and we would stay in communication. Now, we didn't have anything to talk about every week or every month, but we were in contact probably every other month for a 5 year time frame. And I'm so happy to say that she was able to close at the end of last month. And when she closed, she had to bring no money to the closing table. She had to put down money, but she was able to get $40,000 in down payment assistance from Orange County. She was able to get a $5,000 seller's concession from the owner of the house. And she was able to get a payment that was much lower than what she expected. But the thing about it is that it's not like she just woke up one day and said she wanted to buy a house. She had a goal, she had a vision for herself. And then the next steps were to eliminate the obstacles in her path gradually. Her first obstacle was credit. And it took us a while to get there because, again, life does ebb and flow, but she stayed consistent and she got over her credit issues. Ended up with like a credit score now of like 720. So that became a
Mm.
strength for her. She was also very limited with her money to close, right? And what we were able to do is in that time get the right down payment assistance fit for her. So with the money that she was able to get, it was the money for the down payment. She was able to get money for closing costs, and she was able to even bring the balance of what she owed down. So that was an amazing win, win, win all around. And I highlight her because I want you guys to know that it is truly, truly possible to be able to become a home buyer regardless of the obstacles standing in your way. Once you set the intention, once you have your mind made up, it doesn't matter if it's 3 months, it doesn't matter if it's nine, it doesn't matter if it's 5 years. What you have to come to the reality of is accepting that this is a journey that you're going to get on until you're successful. And all we're doing is giving you the steps. So as you move in faith, the steps will appear. All right. So that's just one little testimony I wanted to drop. Super excited about that.
That's awesome, man. That's super awesome, especially working in the background with you and seeing some of these people, meeting some of these people, and then seeing them win. That's been a blessing in this journey since I've been a part of it. Just because you can see the struggle for some, and hoping on. That comes down to that mindset piece too.
Yeah.
They stuck to it. They believed, they had that faith, and they had that encouragement. Not only did they stay encouraged mentally, but they had somebody that was going to bat for them. They had you, Chad,
Right.
like guiding them every step of the way. So when someone's in your corner that wants to see you win, it don't matter how long it takes, right? They were able to achieve that, and showing up they clothes, man. That's truly a blessing. That's
Yeah,
awesome, man.
man. Yeah, yeah, brother. Absolutely. Super excited, super exciting. Right.
Mm-hmm.
So what we're gonna do tonight is we're gonna talk about a few different loan programs. And what I'd like for you to queue up when you come across, when you get a chance, Mo, is some of the statistics in
Mm-hmm.
Orlando in terms of days on the market. I also want you to queue up something that I want us to talk about. The rate of home ownership in different communities, right? And we're going to talk about those in the context of the different loan programs that are available so that you could see that there's a need, there's an urgent need for you to be able to really commit to this process and get to where you're supposed to be in your own home as a homeowner, all right?
Mm. Yeah, and while I'm pulling that up, just so people can kind of understand where we're going with this, what are the different type of like loan products, right? Like that.
Cool.
Yeah. Could you unpack that for us? So, as we go over this, the numbers, they can kind of, put the info with the process.
Right. So there are a number of different loan programs that a traditional home buyer is going to be eligible for. Okay, so what we're going to
Mm,
talk about tonight are the FHA loan. We're going to talk about the FHA 203K loan. We're going to touch on a conventional mortgage, and we're going to touch on VA and USDA. And lastly, and I'm going to touch on it really briefly, I'm going to also talk on what's called a construction to permanent loan, which could really
mhm.
be a game changer. All right. I see Mike and Josh is out tonight, boy.
Mm. Yeah, let me go ahead and.
Yep, yep. Yeah, so to get started with the loan programs, the FHA loan is one of the most popular loans. It's by the Federal Housing Authority. And the real key to this one is that it makes home ownership really affordable and accessible. And the reason being is that it does a few key things that make that process more attainable. Number one, it only requires 3.5% down. I mean, and that's big, right? Because a lot of people, when they start their journey, they say, hey, listen, I'm not ready to buy. I don't have the 20% saved. You don't need 20%. And that's something I really want to get across to people is that that's a huge misconception. You do not need 20% down to buy a house. 20%, when you put down 20%, you no longer have to pay mortgage insurance. But imagine if you waited to save up 20%. Let's say you found a nice $400,000 house. 20% on a $400,000 house is what, $80,000? In this day and age, that's a minute for you to be able to save that kind of money. And it could be years, and the property prices could get out of reach before you can do that. What I highly recommend people to do is buy what you can now, because your finances, more than likely, if you're on a growth trajectory, are going to increase. Your savings over time should increase. Your prospects over time should increase. And equity over time increases. So that means that if you get in today with price values at what they are today, and you hold on to that property for 5 years, 6 years, 7 years, you'll see so much equity built up that's now going to give you more options. And now is when we could talk about that next step up. Now we could start having the conversation about eventually getting to your dream home, but your dream home doesn't necessarily have to be this one. And that's perfectly fine, right? So back to the FHA program, what we have available now is the 3.5% down. So on that same $400,000 house, let me pull out the calculator. 3.5% is only going to be 14,000. So
Mm.
14,000 is way more accessible than 80,000. So if you could get started with 14,000,
All right.
that means that there are a lot more people who have access to 14 than 80,000. And the beautiful part about this $14,000 is that that's on a $400,000 house. Of course, there are property prices that can be lower, can be higher, right? So it's simply the purchase price times 3.5%, which is going to be ultimately the down payment. Now, here's a really cool thing that FHA does as well. It also allows you to use up to a 6% seller's concession.
Mm.
What that means is that we could have the seller contribute up to 6% of the house value. So that's $24,000 on a $400,000 house towards your closing costs. Now, in Florida, closing costs are generally going to be anywhere from 4 to 4.25%. In areas like New York, it could be as much as 6%. Georgia is normally 4 to 5%. Your closing costs are going to vary based on where you are. That's because it's going to be based on the taxes, the property taxes, the state taxes,
Mm.
and each of these places have their own regulations, right? But when you think about getting into the game, getting started, we want to make that process as resistance free as possible. And one of the things that I find to be a big barrier, Maurice, is
Mm.
that down payment, right? Now, let me
Right.
ask you a question, brother. What have you found in the patterns of how people are saving money that is making that $14,000 harder and harder to come by than past time? What do you think in that?
So
What's that?
in that space, what I've been finding is the I'll say it's a scarcity mindset, and it's
Mm,
and I think me personally, I see a lot of people feeding into what's being pushed like in media and stuff. Where as far as like you have to take care of this now, secure this now. Like there's a food shortage, so buy up a whole bunch of food. There's this, you got to buy up all this kind of stuff. You got to do this, pull your money out of your investments because the market is crazy, and so it's a lot of misinformation or misguided. I want to say misinformation. I want to say misguided information. Where, for example, if you understand the market, just for example, if you do it right and know what you're doing in that space, you could actually have made some money. I made some money in the past couple of months. Getting into personal with that, but I think a lot of people feed into the fear mongering and or that scarcity. They don't know what it feels like to hold on to that money, so they revert back to their old ways. And again, that comes down to the mindset piece. Like we talked about this previously, where you heard the story about the person that won the lottery, and within 4 or 5 years they were broke again because they never learned mentally how to manage that money. So I think that's a major thing because all that's pushed in front of us is scarcity and lack, and so we are in a society where everyone has to use their last dime. And so I think that's, to answer your question, where we're at right now.
Word. And I agree. I agree. So savings, right? I think
Mm,
one concept that it took me a while to really embrace, that I think has really been a difference maker for me from a scarcity perspective, because I'll be honest, man, like
mm,
in 2009, uh or was it 2009, 2010, when the recession happened, I lost
mm,
the house to foreclosure. And I remember being
right.
in the courthouse, bro. I remember being in the courthouse when that gavel went down. It was such a traumatic experience for me. Now, I didn't live in the house. It was like
Mm,
I think it was the third house that I bought. And at that time, I was paying all of my rents out of pocket because all of the tenants, I didn't do a good job of pre screening them, right?
right.
I was pretty much doing, buying houses, and pretty much the first name that said I was young and excited about renting. I got a bad tenant in there, and they just didn't pay after a few
Mm,
months, and I wasn't familiar with the whole process of eviction. And worse, it was in New York. But long story short, when that gavel went
mm,
down, man, it did something to me financially, not just financially, but emotionally. And
mm,
I was in this scarcity space for a long time, where every time I had money, I felt like I had to hoard it and I had to keep it. And every time that it got a little low, I'd get anxiety. But
mm,
what changed for me is I started paying myself first and saving 10% every time I made a dollar. Right. So every time I made a dollar, I saved 10%. And what started to happen is that instead of looking at this lump sum of money here, I knew there was this money here that was just growing and growing and growing. And it gave me so much peace. So now I have different
mm,
savings accounts when I operate like that, and it's just relaxed me when it comes down to conversations about money. And I know that I think the faith inside of that is actually
mm,
committing to the 10%, committing to
mm,
paying yourself 10%, come what may. Like on the front end of it, it was kind of scary, but at this
yeah.
point, it gives me so much peace. I actually want to put more money in there because I feel like that's like a security blanket. Like
Mm,
literally, it feels like security.
yeah.
So if you're struggling with that scarcity and you feel like you need to hold on to every dollar, have the faith to pay yourself
Mm.
first. Put that money
I
aside. Yeah.
No, I was gonna agree because I was kind of like my situation too. Just to the I guess to do a, a fast version of like what happened, like being like living that going from living check to check to actually have an increase to the point that I knew at a particular time I was impulsive too. So like if I had it there, I'd be like, oh, family fun weekend. Oh, let's do a random trip. Oh, let's do this. But I started really low. Started paying myself 1%, and then went up to like 2%, got up to 10%, like you're doing, in the same way. So even if my day to day accounts are looking really low, I know I got that money that I never touch because once it goes over there, I'm not touching it. And so, but when you look at that, it takes away that anxiety because you're like, oh yeah, I got money over there.
You got
I'm
that
good. I'm
cushion.
good. But I got that
Yeah.
cushion, and so
My
building
challenge
that
for
up,
you
yeah.
My challenge
Mhm.
for you is to now go to take a look at what your next steps in terms of investing are, because that's the next lead. But we're getting.
Mhm.
I don't want to get
Yeah,
too
yeah.
far from what I'm saying. So yeah, I'm sorry. You can tie your bow, my bro, and I'm sorry.
No, no,
But
no,
yeah,
no. That was it.
that's my
No.
challenge to you is to
Yeah.
get into your investing bag with that money. I know you do your other investments, but
Oh yeah.
yeah.
Yeah, I don't tell people what I'm doing with those things, but yeah. I
Hey,
mean,
hey,
look,
okay, okay.
I'm
No
in there.
stock
No,
tips.
but as far as what we talk about, I do
Yeah.
have a, I did have a plan. There's going to be some, we teach about home ownership, but we, are also doing it too. Expanding our
Yeah, yeah. And
territory.
and I'm a student.
So
I'm a
yeah,
student of money
yeah,
all the
I'm
time
learning.
because there's
Yeah.
only so much I know. Because here's the truth of the matter, right? I'm an expert at the X's and O's of credit. But like Maurice said, impulsiveness and things like that got me, had me for a very long time. But just those small habits where you actually take it out of your own hands, where your
Mhm.
savings is automated, what that's going
Yeah.
to do is give you a piece of knowing that your money's always growing. But then literally you have money eventually that you'll be able to do good things with, like buy your house, right?
Hmm.
And that's what I want you to get in the mindset of if you're quite not quite there. Now, keep in mind, if you don't have money on hand, like I told you about my client that went through 5 years to finally get to her home, she got down payment assistance. And we
Hmm.
have a program in Florida that's going to be huge in just about another month and change. Hometown Hero program. So get ready for that. With the Hometown Hero, that's a down payment assistance program that you could use 5%, right? You'll get 5%, and you could use that towards an FHA mortgage, like we just spoke about. So you
Hmm.
could use 3.5% of that 5% towards, and look how the math works out, your closing costs. So your closing costs
Hmm.
are covered. Closing costs, I'm sorry, your down payment, sorry. So your down payment at 3.5 is covered. Boom.
Hmm.
You still have 1.5 left over. That can go towards your closing costs. And if you get a good real estate agent, they'll be able to negotiate a seller's concession, which I told you FHA can go up to 6%. Now, most sellers aren't going to give you that much, but let's say you find a seller that's going to give you 2.5%.
Hmm.
2.5% on the seller's concession, and you got 1.5 remaining from your hometown hero money. That means that you are going into closing with 4% of your closing costs covered.
Hmm.
3.5 of your down payment is covered. So between splitting up that 5%, 3.5 towards your down payment, 1.5 towards your closing costs, plus getting help from the seller, that is how we are getting people into homes with no money out of pocket at closing. It is a
Hmm.
real thing, and it's now is the time. Now is an opportunity for you to be able to take advantage of a loan program, down payment assistance, and sellers concessions to come all together to be able to help you acquire your home and still be able to
Hmm.
leave that money that you've been saving right where it is.
See, I'm excited with where we're at in the market right now,
Yeah.
especially what we've been teaching for the past couple of weeks. Because I find it interesting because the market is definitely now. If you've been watching, you can see that we're heading into a better market than it was 2 years ago. But I have those numbers, and I want to get your feedback after you hear these numbers, Chad. Like as an industry expert, from the census from 2023, because it's like a year, 2 year delay. So and since we're in Orlando, Florida, we're gonna focus on Central Florida. Okay, so I'm gonna do two sets. First, for Orange County, the percentage of ownership in Orange County, that's basically all of Central Florida, is 59.8% of homeowners. Right, 59.8% of homeowners, and then the city of Orlando itself is 39.7% of owners or owner occupied. And then compared to statewide for the whole state of Florida is 67.3% ownership. Now you're thinking of vacation, you're thinking of like all that's a pretty high number for a tourist attracted state, right?
Right. So let me ask you a question. When you break that down along racial lines,
Mm-hmm.
do you see that in those numbers when you break it down along racial lines?
I can. Let me
Yeah,
let
take a
me
look at that. Take a
look
look at
further
that.
here.
Because
Um,
I
and
think it's
while
an
I pulled
absolute.
that, no, I was gonna say while I pulled that up, I did want to do the breakdown of the loan types.
Oh yeah,
So
yeah, yeah, no doubt.
while I'm researching that, so conventional for Florida, 65% of the loan products that get serviced in the state of Florida, 65% are conventional loans, 15% basically new homeowner of FHA loans. So a
It's
large
only
amount
15.
of
How many percent?
15%
Wow.
are FHA, VA is 10%, and then USDA, which this shocked me. USDA is only 5%.
Well, I mean, so when you consider, well, we'll get into USDA in a second,
Because I'm thinking about
but
like
I'm
the
surprised
territories
because
and
for
stuff.
me, right. So for a lot of my clientele, we do have a good bit of high end clientele, but where we spend our, I guess, ministry, right? When we work with
Mm-hmm.
people at churches and different companies, in schools, we end up getting a lot of FHA buyers. So our composition of business is probably about 40% FHA, or probably 30% FHA, 40% conventional. We do a good bit of uh those VA loans, and we don't do too many USDAs, right?
Mm-hmm.
Because with USDA loans, these are loans that are in rural areas. So
Mm-hmm.
there are a lot of people who aren't so much. Most people are running to the city centers, and what we're finding here in Central Florida is that the city centers, right, like your Orlando, these areas have become so pricey that people are now starting to go back out. So I think we should take a look at that USDA number probably in the next 2 years to see
Mm-hmm.
what the difference is going to be. But yeah, absolutely. Now,
So,
I told you about a few key benefits of an
mm-hmm.
FHA: 3.5% down, up to 6% seller's concession. Uh, Another major thing is that they also make it so that if you have student loans, and student loans has become a crisis in this country, as of what was it, May 5th? Was it May 5th or was it April? I think as of now, student loans are going back into default for non-payment. So that's going to be a real rush. So we're going to have to pay attention to see how
Mm-hmm.
that plays out. But with student loan debt, FHA only calculates 0.5% of your student loan debt against your debt to income ratio. Another very key benefit is that they allow you to use a debt to income ratio that goes up
Mm-hmm.
to 56%, which means that even though you might be, financially stretched to buy the house, they're going to give you a little more allowance to be able to go for it because look, the price of living is going up and the price of rent is going up. So
Mm-hmm.
when you really check it, you might end up having a new home loan that your mortgage payment might be a few $100s higher than what your rent was. But then the next year your rent's going to go up. The year after that rent's going to go up. The year after that rent's going to go up. And what happens is that eventually the price of rent is going to outpace your mortgage. It
Mm-hmm.
might take 3 years, it might take five, it might take seven, but it's almost inevitable that it's going to outpace it. So they're giving you up to 50% of your income can be used. Uh, Up to 50% of your income is going to be the standard on which they use to
Mm-hmm.
qualify you for a home rather than 50% for conventional. So now that's opening the doors for a lot more home buyers.
I got those numbers up. I was reading through it. That's why I was smiling because I found the numbers quite interesting.
Okay,
But
cool.
um, but I'm gonna break it down. The way it's broken down is by the population of each race according to Florida statutes, right? So it says 75% of Caucasian owners are homeowners. 75% of that population. 74% of the Asian population are homeowners. Um, and then a mixed, so this can be anyone, but two or more mixed race people that identify as two or more race mix. That population is 58%. And then you have the Hispanics population, which is 56%, and then the African American population, which is 50%. So 50% of the African, yeah, so
Really?
half of the African American population in Florida are homeowners. Um,
That's
yeah,
fantastic. Well, compared to the national
right,
average,
exactly. And then
the national average is around
yeah, so we
43%.
we doing pretty good here in Florida. Native,
All
native,
right, all right. That's
yeah,
a
Pacific
win.
Islander native are 55, 53% um, for Indian, and then other is 53%. And then they broke it down by area. So, for example, it's pretty even around Orlando, the city of Orlando, where 32% Caucasian, 21% African American, and 35% Hispanic. And so,
Wow,
it,
that's
right, that's very
diverse.
diverse. And then it
Yeah,
also
no
said
doubt.
one of the highest growing populations is the Hispanic community. They went from 50% to 55, well now 56% over the last 2 years in Orlando
That's
as
awesome.
homeowners. So, um,
Right.
and then of course like the, the villages, I had to laugh at that because 95%
The villages.
95% Caucasian, less than 1% African American, 2% Hispanic, and then the rest is other. But yeah, but based on that, that's kind of just a generic outlook. So um, more people or more minorities are buying homes in recent years. Even though there's still a gap, as it says here, there's still a wide gap, but that gap is closing, and especially with opportunities in the way the market is now, that gap can close even more with us providing resources and education like this. We do have a question in the chat. I'm not sure if you saw that, Chad.
That's a great question. That's a fantastic question. So first and foremost, before I jump on that question,
Mm,
Princess, um, a lot of people see that as a gap. I see that as an
mm-hmm,
opportunity, right? Because you want to buy stocks when they're low, wait for them to go up and cash out. I'm cashing in on the fact that the African American community, while only half of us in Orlando are
mm-hmm.
homeowners, there's another 50% of the
That is true.
population that we get to work with, change their mentality, implement different steps around the process to teach them how to budget, teach them how to save, give them the tools that they're going to need to be able to save and uh, get employed in a way that's going to help them to buy. There is an opportunity there for us. So I'm excited that even though the national average is 44%, here in Florida, we're at 50%. There's so much more room for growth. So that's really exciting to me. But yeah, you want to
So
set up
yeah, I
the
just set
question,
it up.
Mo?
I did want to add one more part too, because another big thing that because our campaign is speaking to churches for free, 80% of the African American community identify as churchgoers, right? So a large a large population attend churches. So we're bringing this information for free to churches. That 50%, that other 50%, we're gonna cover a lot of territory, and this is why we do what we do.
Yep,
But I just got the question queued
100%.
up. I'll go ahead and read it, and then that way, you can elaborate on it. But how important is it to understand your ability to pay the mortgage along with the associated cost of owning a home? Many people may get qualified for a home, but realistically, they will struggle or get into default on their mortgage. That's a great question.
That is a phenomenal question, Princess. And I mean, that captures the challenge of this moment, right? And the challenge of this moment to me is the fact that a lot of people aren't earning an income that's going to give them much of a chance to win as a tenant or much of a chance to win as a homeowner, right? The thing that I'm looking at though is that this is a huge, huge risk for many home buyers because ideally we would want people to be at 28% of their income to be able to purchase a house. But let's be honest, if we waited for that, a lot of people would never, ever, 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 ever buy. So, on one hand, I'm going to tell you that I think it's been a blessing that FHA loans, yep, FHA loans, and I'm actually going to go into that in a second, Princess. She said we saw a lot of this in 2009. FHA loans, conventional loans, uh, they allow you to go up to a 50% debt to income ratio. But the good thing that they do is that they include mandatory your taxes, your insurance, your mortgage insurance to be included into that payment. So people aren't getting behind on their taxes and their mortgage and all of these things. Instead, they get a chance to see what their payment is so that their ratios are going to determine based on all of these variables your P&I, your principal and interest, your taxes, your insurance, your mortgage insurance. You don't quite cut it, right? But as you said, there are expenses outside of just owning the home itself, just paying the mortgage. First off, the fact that there's more transparency in that regard is saving a lot more homes, is saving a lot more people, because now it's not like back in the day where they could just give you a principal and interest
Hmm.
mortgage payment, taxes and insurance not being included, and that not even be a conversation where you have to fend for yourself and figure that out for yourself. What we like to do with our clients, we always give them a full scale sense of what home ownership costs. We talk about maintenance. That's actually chapter 10 of our system. That's the 10th module. Like, how does maintenance come into
Hmm.
play when you are getting an inspection? What are the things that you want to look at? Because you could utilize as an opportunity to get things in the house fixed so that you don't have to fix them in 2 years, or drive down the price so at least when you do have to fix them, you know that you got paid for
Hmm.
that, so to speak. So with those things, we like to prepare people as much as possible and take advantage of that moment of negotiation as much as possible to have them be more secure. I had a thank you. I had a buyer that just closed day before yesterday, and we ended up having a higher cost on the roof, on the insurance, because the roof is 17 years
Hmm.
old. Now, if I was in a position to negotiate a deal like that, if I saw the roof was 17 years old, you better believe I'm getting at least an $8,000 seller's concession right there. I'm dropping the price at least $8,000 to cover for that cost that we're going to have to ensue on now higher insurance or a
Hmm.
roof. It's inevitable. The shelf life for a roof, the lifetime for a roof is about 20 years, up to 20 years in most cases. Beyond 20 years, you can't get insurance. So all of these nuances and details, you need a real estate professional that's going to really walk you through them when you start the process. Because, like Miss Princess said, you don't want to be
Hmm.
surprised by all of the new expenses that home ownership has you take
And I
on.
wanted to add to that too, because you went to it at the end. But having a good real estate professional that has your back, um, and one thing that I've learned that we do things differently here is like we base things off of credit, and so people try to get the best house instead of the house that makes the most sense. So just because you can right
Right.
now, and to this question, afford the house, it may not be in your means. And I think what happens a lot is people lose out on home ownership because they get a house that's above their means, even though on paper they can qualify. Their money habits and their monthly income and how they manage it really doesn't qualify them for that. I remember when I was looking at a house, and even though I could on paper afford it, my realtor was like, "Hey, even though your numbers show you can afford it, this, to be honest, might be too much because you'll be paying this per month." And just how Chad broke that down, they broke that down to me, and we ended up not going with that house. Thank God that this, the house I'm in now, I live comfortably and beautifully because I bought a house that was in my means. Now, one caveat was I moved an hour outside of Orlando, but I love it here, right? But sometimes you have to maybe go somewhere where it's uncomfortable if you really want that thing to work. So sometimes you have to do some things a little bit differently, or willing to say, okay, I'm out to, if I really want to own a house, I might have to take a cut as far as like the size of the house. I might not be able to get the things I want because you got to live within your means. And I think that's another thing. Going back to that
Yep.
savings part, going back to this question, is we just want the best that we can get instead of being realistically living in our means.
I'm with you. I'm with you. And like Miss Princess mentioned, we saw a lot of people not being able to afford their mortgages in 2009. Now, I'm going to tell you a huge difference between that market and this one. Now, a lot of people are projecting us to be going into a recession. Now, one thing that I'll tell you is a saving grace is that mortgage loans have been given out very responsibly, in my opinion, because in 2007, 8, 9, there were all kind of exotic mortgage options. There was one loan, for example, called an MTA mortgage, right? The MTA mortgage was, I used to say, here's my sales pitch. It was kind of dope. The MTA mortgage is like an ATM for your house because it gives you four different payment options. One payment option that's fully amortized for 40 years, one payment option that's fully amortized for 30 years. There is an interest only option and also like a 1.9% option. Now, with that 1.9% option, it had what's called negative amortization. So that means when you pay a regular mortgage, over the course of time, your balance goes down because it's amortized over 30 years and you start paying interest in it towards you pay in principal, just like your car. Negative amortization means that your mortgage balance does this. So when you give people four payment options and one of them is at a 1.95% or 1.5, which payment option they gonna make every month? The 1.5, and that's what was happening. So when I was saying it's an ATM for your house, the
I muted
pitch
myself. Sorry.
was you get to save. Yeah, yeah, I see you muted yourself. Yeah, I read your lips like Millie Vanilli. Uh, so that one payment option allows you to save more money, so it feels like you have more money coming in. But it was a deceit.
Mm-hmm.
The program itself was so destructive to the market. They had interest only mortgage programs and all of those other loan programs that as
Mm-hmm.
salespeople, we got to sell and there was no real accountability to how we were
Right.
selling it. So it was super irresponsible. In today's market, all income has to be documented. It's all on paper. So we know that if you qualify, you qualify. And one major thing that we always like to do is to make sure that the client and the borrower understands all of the details that make up their
Mm-hmm.
payment. Like, for example, insurance. If we're getting you low insurance to help you qualify, you want to make sure that you take care of all of the things around the house. Like, for example, when we have a pool, and if we were to get inspected and there was no pool gate, my homeowner's insurance would shoot up. So if you have a pool, make sure you get a pool gate because that's going to keep your homeowner's insurance rate down, right? And that's just one of many things that we focus on. But yeah, absolutely understanding the payment, being in a position that you take the time out to speak to your mortgage professional and that you get every question that you have to ask, get it off your chest
Mm-hmm.
because when you close, we can't press rewind. We can't go retroactively and fix those
Mm-hmm.
issues. So definitely take the time to speak to your professionals, get them on your side, get them working for you, and just get clarity with every phase of the process. Every number matters,
Mm-hmm.
right? So with that being said, we spoke about the FHA mortgage. With a conventional mortgage now, you can get a conventional mortgage as low as a 3%. A lot of people think 20% down. That's only to avoid mortgage insurance. Go ahead and pay your mortgage insurance until your property value goes up. And let me explain how that works. When you put down less than 20% on an FHA conventional mortgage, you will be charged insurance that the bank is charging in case you default, they don't lose their money, right? So you do have to pay this because it becomes a high risk loan with less money down. But the beauty of it is that you're in the game. So now that you're in, you might be on your tippy toes trying to figure it out. And I know that's not a great feeling and I know it's not a great experience. The only thing is that I'm looking at the reality of how high rent is. Take the gamble because oftentimes you don't know what you're made of until you're
Mm-hmm.
tested. And home ownership could be a huge challenge, right? But the good thing is that if you qualify legitimately for your mortgage, your lender will work with you.
Mm-hmm.
They'll work with you if you do come into a hardship. Let's say someone loses a job. You could call your bank and they'll do what's called a modification. They could do a forbearance. There are a lot of different things that they can do to lower your payment and give you time to get back on your feet. So take the risk now because let's say that you have a hard 5 years of really being able to make that payment. When you turn around 5 years from now and your house is worth 50,000 or $75,000 more, You don't have to worry about getting
Hmm.
foreclosed on. You sell your house and you walk away with some money. You can't do that with land you as a tenant. You just can't. But with a conventional mortgage, you can be, if you're considered low to moderate
Hmm.
income in a particular uh, area, you can get as low as a 3% mortgage on a conventional mortgage. Traditionally, though, it's going to be 5% down. Now, 5% is more than 3.5, but what you'll find is that conventional mortgages are less restrictive than an FHA mortgage. For example, if a property has certain damages, an FHA mortgage is going to require that you fix some of those things before you could actually close. A conventional mortgage is going to give you room to really have the autonomy to make that decision on yourself, as long as the cost to cure or the cost to repair those damages are less than $11,000. So that's a real benefit that a conventional mortgage offers that a FHA doesn't. Now, in addition to the 5% down or as low as 3% down, a major difference between the conventional and FHA mortgage is that conventional mortgage is only going to allow you up to a 50% debt to income ratio. So, what that means is that when you look at all of your gross monthly income versus your gross monthly debt, your debt has to be less than 50% of your income. And that includes your new mortgage payment as well. So that's really going to determine how much of a house you can purchase, right? So again, be responsible with how much of a house you can purchase. You don't want to put yourself in a
Hmm.
position that you're like in the pool on your tippy toes. You want to give yourself more security and stability, but then always put yourself in a position that you're advancing in your career. If
Hmm.
anything that I could tell you, Mo, is that this market is getting people who are serious on their
Yeah.
hustle, getting their degrees, going back to get their certifications, increasing their income, negotiating with their bosses. I'm loving to see that
Hmm.
because we got to do everything that we can to improve our odds of home
Yeah,
ownership.
that's definitely true. Especially with numbers showing, like it's like one of those things that's like once you see it happen and you see it happen in abundance, like we know so many homeowners at this point. Becoming a homeowner seems more real to people, which opens that door of the reality of them becoming a homeowner. But if you don't see it, if you don't know how, of course you're gonna, think like it's against you. But even these numbers, honestly, a lot of these numbers, I'm not even gonna lie, were kind of higher than what I expected, and so that just shows you where
Right.
we're going as far as our community. As far as Orlando, Central Florida is a melting pot, a mixing pot that's really growing. And I say that to say y'all need to stop moving here. This is for people that's already in
Uh,
Central Florida.
Seat
Yeah,
taken.
yeah,
We're gonna do you like
yeah, not
Forrest Gump on the
yeah.
bus. Seat taken.
But yeah, man.
Can't sit here. We good in Florida. It's
Hmm.
congested. Traffic now. Oh, we got alligators. You don't want alligators and snakes now. Yeah, y'all don't have that problem up north. Yeah, y'all don't need those. Uh, all right. So just to run through two more
Yep.
loan programs that are really powerful.
VA, right?
For people that have served our country, thank you so much for your service. I think this is one thing that our the powers that be got right. Giving our veterans a loan where they have no down
Hmm.
payment is phenomenal.
Yes.
Is phenomenal. And the beautiful part about it is that the bigger sacrifice you made in that process, the bigger the benefit is. So VA mortgages come with what's called a funding fee, which is a fee of 1.75% that can be financed over the course of the loan. But let's say that you are fully service disabled, no funding fee. Let's say that um you were
Honorably discharged.
injured, like if you were injured, I forgot the terminology, no
Hmm.
servicing fee. But VA loans give you
Honorably dis-
0%
Honorably
down.
discharged.
Yeah. So that wasn't, I was talking about like service
Yes.
disabled.
Yeah.
Yeah, service disabled
Okay.
vet, right? Because I mean, we got people who really put it all on the line for this
Hmm.
country. And when they come home, now they get to get their 0% down payment mortgage. They also get the funding fee waived, which is 1.75%,
Hmm.
which would be waived in that regard. Um, Now, when we're talking about a VA mortgage, they want to make sure that our veterans are buying houses that aren't burdens later. So they do spend more time and focus on the inspection process. And one thing I always talk about this, man, because this is pretty much like the secret syrup. Wounded
Mm,
warriors, right? Yeah, wounded warriors get a lot of love as they deserve, right? But inspections are a wonderful place for you to be able to negotiate again. A lot of the times we don't know what a property is until we do an inspection. We don't. It looks good, the numbers look right, calculating, that's great and all, but what's behind the wall? What's under the sink? What's lurking that we can't
mm,
see with our eyes? And that's what the inspection does. And when these issues come up, what we had a deal when I thought this house was all a bed of roses, is that going to be the same? Why should it?
mm,
If you weren't told about that in advance of your negotiations, we're talking about a new deal. And that's the
mm.
opportunity. So sellers concessions, price, and repairs are all on the table. I mentioned the lady that I was working with that took 5 years to get ready to buy, and I'm so proud of her. When we actually went to inspect her
Mm.
house, the AC unit was old, the water
Oh
heater
wow.
was old, and there was something else that was old. We negotiated and had the seller fix all of it. So she saved probably about ten thousand
Oh wow.
dollars in repairs. And like Princess was talking about, those are the things that come back and haunt you because when your hot water heater goes, bro, you got to fix that. And that's going to be $1,800 out of your pocket. If your AC unit goes, oop, that could be $3,500
Hmm.
out of pocket. And if you're not
Your
prepared for
septic.
that, that's where that could throw your whole finances off. But when you do the inspection and you make sure to account for all of those inevitabilities, you could set yourself up to win.
Yeah. And there's one more.
The USDA loans. Now, with the USDA loans, there is a website that you can go to. You go to USD, well, Google USDA loans, and there's something called the eligibility map. And when you put in the address, it's going to tell you if they're eligible or not in that area. Now, this is all about allowing people, especially focused on people in rural areas, giving them an opportunity for home ownership. So again, like the VA loan, this is another zero down loan. And when I say zero down, keep in mind that's for the down payment. There's always still closing costs. So even though you're coming into the situation zero down, there's still 4.5, 4.25% waiting for you to pay. So we still have to figure out how to get there, right? How to help you cover those. But zero down compared to 3.5 or 5% or the 20 that you thought is a huge start. And these loans again are restricted for uh, USDA eligible areas that are rural, and oftentimes these areas,
Mm.
are places that are on the come up. What are you showing there, Mo?
For the USDA.gov site here, where you can get more information to see if you're in a rural area, to see if you qualify for the loan.
Right. I wonder what happens if you put your address in there
I'm not.
with all your
I'm not gonna put my
chickens.
address because I don't want nobody to come find me live.
But I thought you was trying to find your wife, kid. I don't know.
Hey.
Hey,
Nah.
we'll get her over there another way. Don't worry.
Yeah, I'm looking for them. They're not looking for me. Okay.
Hey, huh?
It says he who finds.
Ah,
I'm
yes,
I'm
you're right.
looking.
Finds a good thing. Fine. Shoot, I found a great thing.
Lucky.
Yeah,
All right, let's see keywords. Leesburg.
yeah. It's not. It's
See.
not showing. It's not showing. We got a black screen over here.
Oh, it shows. It's showing up on here.
Yeah, no, it's not. If anyone else sees it, please let us know. Oh, okay, cool.
Do you see it now or no?
No,
I'll stop it
someone
for
said I
now.
can't see the speakers. Yeah,
Okay, I
yeah.
went back
Just
to.
yeah. Let's put that down for now. Yeah, I don't know what's
Okay, yeah, I
going on.
was.
Let me check my Instagram real quick. I want to see how this is
Yeah,
looking
it's
on
on.
Instagram.
Yeah,
It's
it
looking
was
good on my Instagram.
Yeah, we could see us, but we couldn't see the screen.
Oh, for real?
Hmm.
Man, I don't even know how to do this. I'm an old man trying to figure out these new
But yeah,
age things.
I was trying to navigate on how to acquire information from the USDA site, but it's we're all
Okay,
good to
yeah.
go.
So yeah, but yeah, I mean, the whole key to it, and the whole gist is find a program that works for you.
Hmm.
Make sure that you find, um, preferably a mortgage broker. And the reason why I say a mortgage broker is because
Hmm.
they just have a lot more tools in their tool belt. You go to a lender, they normally have one speciality. And if that works for you, that's phenomenal. But if it's not their jam, then you might find yourself in a program or a situation that doesn't work for you at all. So yeah,
Hmm.
definitely find somebody that understands your needs and is
Hmm.
willing to work with you right where you are. With Homebuyer Academy, what we specialize in is taking you through the home buying process from the very beginning all the way to celebrating you at closing. And that is always our goal, is to be there with you when you actually get the keys to your new home. There's no better feeling, man. I absolutely love it. So I hope that we get a chance to work with you. Um, we definitely hope to get to work with you one day. So yeah, Mo, those are the
Yeah,
four
just.
loan programs. The four loan programs again:
Hmm.
FHA mortgage, conventional mortgage, a VA
Hmm.
mortgage, and USDA mortgage. I was gonna talk about one more, but I think I'm gonna make that its own thing. I'm gonna make that
Okay.
its own thing because it's very detailed. The construction to perm loan.
Could we do that maybe next week or following week? Talk about the construction loans or even like second properties or you're looking for like the next big thing kind of. Maybe we can go
Yeah,
there.
absolutely. Because a
Okay.
lot of our circle, already, like you mentioned, we like everyone I rock with is pretty much like a homeowner, just about.
Hmm.
And they're looking into investment options and investment
Right.
opportunities. And the thing
So I
about
might be
investment
good.
property, now we're talking about 20, 25, 30% down, 35% down on hard money, right? There are other
Hmm.
options. There are other options that could just require 10% down that could be a real game
Hmm.
changer for a lot of us. So we'll definitely talk about that. I spoke about that briefly last week, but we'll
Yeah.
go more in depth in terms of construction, because there's a one thing that Florida has a lot of is land. What do
Yeah.
you do with that land to turn it into land that you could live on, a home that you could have for you and your family? There's a program that's a specialty that we could walk through, and I think people would really get a lot of value out of that too. So yeah, we could do that next time, bro. Definitely.
It's gonna be open for Florida residents only. So I'm just kidding. Yeah,
Yeah.
no, but that's good. So guys, join Homebuyer Academy live. We have the join 2025 Homebuyers Club, because as you see, we're not talking about first time home ownership. We're talking about all kinds of home ownership, from conventional loans to first time home buyers, from first properties to second properties, from construction to everything. So if you want the updates to see, when's a great time to buy, what the market's looking like, if you need that fresh information weekly, join the 2025 Home Buyers Club on Facebook. It's a free group to join with free content, free updates, free information. You get us all day, every day. And then you get first access to Home Buyer Academy Live. And if there's anything new that comes out, like some new items we're dropping soon, I think we're going to do another free drop of some content, like a free book, or maybe a giveaway for the course, whatever it may be. Be on the lookout for that. We have a lot of things coming up. You want to stay tuned, and that's how you stay tuned with us. Any closing remarks, Chad?
Yeah, so I just want to let everybody know that we are looking to get into more churches. We
Mm-hmm.
really want to serve our community, and it's like Maurice said, 85% of people of color
Mm-hmm.
are churchgoers, and we feel as if there is a wonderful way for us to be able to serve, and that's to be able to do these home buyer workshops. And we do it different than everybody else. But
Mm-hmm.
definitely bring us into your church. We would love to be able to empower your community. Bring us into your schools. Bring us into your company. We do lunch and learns, and our goal is education, education, education. Because without knowledge, the people will perish. And thank God people are really prospering and growing, even though it might look hard. The reality is that there's opportunities and blessings all around us. So I want us to
Hmm.
lean into those blessings and serve each other by giving each other opportunities to learn things that they might not know about, and we're here, that's what we're here to do.
And I'll leave you guys with this last thought. There's a lot of scripture about leaving one territory into a new territory in order for you to possess what God has for you. So, if you're looking to become a homeowner, it might be time for you to pick up your family and go into a new land, a new territory to receive what God has for you. So, that's my thought for today, and catch you guys next week.